Hello and welcome to Banking Transformed, the top podcast in retail banking. I'm your host, Jim Marous, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. So we're at the midpoint of 2023, making this the perfect time to take stock on the major trends shaping the retail banking industry globally and to look ahead to the future. You know, a multitude of events this year have altered the industry's trajectory, influenced by consumer behavior, and prompted financial institutions to reassess their business models and their go-to-market strategies. The question is, which events have had a lasting effect, and what gaps exist between what financial institutions are delivering and what the customers really want? I'm really excited to have David Brear, CEO of 11FS, on the Banking Transform podcast. We'll be discussing how banks and credit unions have reacted to the major global disruptions and what major opportunities and threats currently exist in retail banking. So I'm thrilled to have David Brear joining me today. I've known David for almost a decade, and he is the acclaimed industry analyst and digital banking transformation leader based in the UK, where he keeps his finger on the pulse of banking innovation worldwide. So welcome to the show, David. You know, interestingly, despite knowing each other for almost a decade, this is the first time either one of us have been on each other's podcast together. You know, for those of my audience who are not familiar who you are or 11FS, can you provide a short synopsis of your background as well as your firm's?
Yeah, no problem at all. And thank you very much for having me on, Jim. As you say, first time podcast sort of co-guests on something together, but lots of chats in lots of far-flung places, haven't we, which has been fun. But so I'm David Brear. I'm the group CEO here at 11FS. Prior to 11FS, I ran Gartner's global digital banking capability. Before that, a big Indian offshoring digital banking capability, and then before that, a big banks transformation. So I've sort of been steeped in financial services for as long as I can remember, really. I should say to anybody listening to this, very much wasn't my career trajectory that I was expecting. Like, I'm by no mean, despite being a banker, was definitely not meant to be one. I was very happy playing sports semi-professionally. Unfortunately, one bad maneuver and 3 ligaments in my left knee later, and I had to get a proper job. So, but I had a hell of a lot of fun. Started the business 7.5 years ago now. We have built 12 propositions around the world now, actually. So, which is super exciting. Built brand new challenger banks for people like NatWest in the UK with Metal, Standard Chartered over in Hong Kong and Singapore, things like Mox with those guys, and even over in the US as well with our friends over at FMBO, building out Millie, a challenger bank that we built in the Midwest in the US.
Yeah, and it has to be said that I referenced it, but David also has a team that puts on some of the best podcasts in the industry on every subject, ranging from crypto to trends. And if you haven't caught it already, make sure you check out 11FS's podcast. They're excellent. He's got more listens than anybody in the industry, in the financial services industry, I believe. But, you know, as I mentioned before at the introduction of this episode, David, a ton has happened in the banking industry so far in 2023, not to mention since the pandemic. You know, as a global industry observer, what significant trends or events have really shaped retail banking in the last few years? You know, how have these impacted banks worldwide, and what lessons have been learned from these experiences?
Yeah, I mean, it's been a fascinating journey, isn't it? Really, I think. I mean, even since really the financial crisis back in 2008, the cycle is just about resetting itself now with everything that we're seeing. But it is an amazing one. There's often a sort of boom and bust when it comes to financial services, but the cycle of boom and bust around people really looking to take advantages of that as well are almost sort of 18 months to 2 years after it. I mean, the rise of the amazing things that we saw in fintech, you know, in 2010, 2011, off the back of the financial crisis, really are why we're all in jobs today. You know, the Monzos, the Starlings, the Revoluts in the UK taking advantage of that regulatory change. And actually, I mean, really what we're feeling today, whether it's the rippling out of, faster payments capability over in the US, or whether it's open data capability over in Australia, then actually those ripples are still hitting different shores. But one thing's for sure. I mean, I think the customer is in a much better place now than they ever were, and most of that is down to really having real competition in the market. Digital for us, and this really is the thesis of the business when myself and Jason and a few other people sat down, back in 2016 to start the business, is that really financial services don't understand digital at all. And because when people say digital, they think, okay, well, I have a website or there's an app, but digital is more a manifestation of your operating capability than it is anything else. And really that's the thing that we've seen really be the biggest evolvement in financial services, is that shift from slow moving 2-year, 3-year big bets transformation cycles to actually trying to embrace fundamentally a test and learn mentality. Because actually, if you're betting what's going to be interesting in 3 years to your customers, you're probably going to be wrong. But if you're betting in 3 weeks from now and you have the ability to make that change and do that and put that feature in the hands of consumers, you're probably going to be more likely to be right. And obviously that changes your risk profile, it changes your investment portfolio as well, and everything that really, really goes with that. So that shift from a waterfall analog mentality to a always on, always testing, always learning has really been amazing. And that's really what we've been doing with customers. Whether it's Metal or Mox, the manifestation of those things are different. You wouldn't think a retail bank in Hong Kong is similar to an SME bank in the UK, or a retail bank in the Midwest in the US. But fundamentally underneath them is a digital operating model. And that is the biggest thing that I think banks can really get to grips with.
You know what, David, you said so much in there. It's hard to unpack it, because underneath everything you're saying is, number one, while we think it's what reaches the customer, the top of glass experience, it's really the under the glass, the back office transformation. That's the most important, because you can't make the top of glass really work if you haven't fixed the underpinnings. On top of that, we've gone through a period of massive technological change and technological advancements, but probably the most important of which has been the composability of solutions, where you can take these solutions and not have to reset the entire, platform. You can do it in pieces, which wasn't even possible at the beginning of your company. You were talking about it very early in your company's existence, the ability to fix individual components to make you more of a digital bank. And, you talk about that the whole fintech world, the transformation is only 1%. I think it's 1% finished. I may be wrong. It might be 2%. But what's interesting is that really hasn't changed. As much of advancements as we've had, we still are playing a massive game of catch up. What Definitely. Do you see is the thing that holds back organizations the most from making the changes that you and I both talk about virtually every day?
Yeah, I think initially what I would say to that, is it's really difficult. Don't get me wrong, and having been in a big bank, I know there's no banks out there who are like, oh, I just don't get this, like this internet thing, it'll never catch. People are not like that, right?
But they know it. They know it.
Yeah. But the reality, I think, of the situation is that for many organizations, the thing that has made them successful becomes the way. And actually, the challenge with that is your existing business models, the way in which you structure your organization fundamentally get eroded in a world where digital isn't just the manifestation of the thing that you've done before, but a rethinking of actually how you fundamentally serve customers. This is going to be difficult for a podcast, but bear with me, everybody listening to this. We sort of think about the world as 4 layers. There's the basis of the rails that underpin it. That's the money movement around the world. Above that, you have where traditional financial institutions build products. So these are products like financial instruments in the way that your regulator would understand them. But interestingly and increasingly, the things that are more compelling in a digital world are the services that go above that. Fundamentally, what problem does this solve for us? And then beyond that, the journeys in which you embed those services. Now, the difficulty is that banks are really, really good at, don't get me wrong, like MasterCard, Visa, Amex, Rails, like they get those, and that's great. We can commoditize those. We can push them down the stack. And actually, we've seen similar examples in mobile network operators in other industries. It used to be Sprint and Verizon ruled the world and could dictate to handset manufacturers what they had on their handsets. Gone are those days, right? Now actually they're just that little icon in the corner of your iPhone. You don't really care what those things are, right? But actually those financial instruments are the way in which banks understand. And actually, fundamentally, they're not just what they understand in terms of tweaking the interest rates or, your APRs on those things. But fundamentally, they're the monolithic structures in which they set P&Ls, that they create department structures, that they incentivize people along. So no surprise, really, that as customers who are consuming all of these things, you get a striated experience. You get people trying to sell you a credit card, people trying to sell you a checking account, people trying to give you investment advice. So the slices of all of this isn't how consumers want to consume these things. Increasingly, and this is something that, it's been an absolute privilege over the last, 7.5 years to do. We're a big jobs to be done believer, the Clayton Christensen methodology. We've done, jobs to be done frameworks in, like say, Singapore and New York and sub-Saharan Africa. What you find in all of that is amazing, is that the gap increasingly is widening between the problems that consumers really have and the services, the financial instruments, those products that banks are really providing. And the thing in between those is an amazing, just a voyage. You find crazy spreadsheets or bits of paper or just bizarre financial processes that customers are creating just to get through the brutal realities of day-to-day lives. And that's amazing. What we're finding, those services, for organizations who could create those services in the middle, then actually what you're bringing is bizarrely some of the traditional values of financial services, that those people who understand you and can help you, that don't create barriers through complicated, obfuscating words for, fancy financial terms, but break it down into simple ways that can actually help you. I think really through, as you said, we say digital banking is only 1% finished, because fundamentally with all of the investment in digitizing banking, really what we've got to is a self-service terminal on a tiny screen we carry around in our pockets. And that's not enough. That isn't really, if right. Algorithms can drive cars, then, why are we still getting charged when we trip over into our overdraft if we've got money on our savings? It doesn't make sense. So I think that shift and those 4 layers, increasingly, if banks and FIs more broadly want to play in that services piece, they want to play in those journeys. They want to, embed finance into where it's really relevant to solve real problems. Then it requires a completely different way of thinking. It requires a very different way of operating. But that's exciting. That the flip of saying digital banking is only 1% finished is that we got 99% of the journey, right? And that for me is Jim, it's when we've talked a lot before, this is why we get out of bed, right? The excitement in what the future could be if we made it.
Yeah. And I have to admit, we both benefit from the fact that only 1% is done, because we're helping on the other 99%. It's interesting because at the end of the day, it takes leadership. Think about the banks you're working with. They're the most progressive leaders that are willing to embrace change, are willing to rethink what banking means, not at the fundamental level, but how we implement against it. You brought up the things that are broken, and I just last week went to my bank and said, am I missing something? Because every month I have to write a check from my business account to my personal account to transfer funds, because you don't make it easy for me to transfer a significant amount of money every month from one account to another. And I said, am I missing something? Can you do it? They said, no. I said, okay, let me give you another question then. I said, I'm dealing with Acorns, an automatic deposit process, but they use Plaid as their go-between. Do you support Plaid? He goes, no. This is a top sixth bank in the U.S. that doesn't support Plaid because of risk profiles. It's the mentality of risk avoidance versus risk management, which, as you know, working in with banks globally, that's a big deal. There's a major mind shift there. But
definitely,
you also have the challenge that these leaders have never not been successful in the last 30 years. They've brought home great earnings for their shareholders. They've avoided risks. They have avoided the major pitfalls of the 2008s and the 2020s, and they feel pretty heady about themselves. But the customer's not satisfied, which is why consumers are attriting silently and using different solutions, but they're having to use so many different solutions to get to where they want to go. It's not efficient. We talked about it before we got on the air, how the economic volatility over the last couple of years has actually had a bigger impact on financial services than COVID did in many ways. How have you seen the concern about the economy changing the strategic priorities and the tech investments in the banking world?
Yeah, I'd say, interestingly, firstly negative, secondly positive. I'd say the back end of 2022 and then, rolling over into 23, the sort of rumors around, obviously from a global perspective, any student out there doing some sort of pest analysis or pestle analysis right now has a lot to write about, right? Because there is political instability, there is economic problems happening, there's social uprisings, there's every box you could tick in terms of happening right now. If you throw in a couple of big banks going, under due to the times that we're sort of facing, and I said this off air, but Silicon Valley Bank is a very big organization in that sense, but Credit Suisse over in Switzerland is huge, and the legacy that brings, and actually the instability, the domino effect that has on not necessarily other banks going through similar things, but just the risk appetite of those organizations. I think it's been interesting to almost see we've sort of reset the cycle again coming out of it. What I would say, though, is unlike the financial crisis in 2008, it was pretty much every bank and every slice of banking had that problem at that time. Because we're in a situation where we've got, we sort of, in the UK, there's a whole generation of people who didn't know what interest rates were because we didn't see them for 15 years. So bizarrely in retail banking,
we never had to generate savings. We have financial institutions now that go, oh my gosh, I've got to figure out how to generate savings that aren't just coming in by the will and not having to pay for them. And now they're rethinking because they have competition for those savings accounts. Yeah,
it's bizarre.
It hasn't happened for quite a while.
Well, and that changes the spreadsheet that every organization was being run on fundamentally changes when those numbers, 10x in that sense. And actually the interesting thing in terms of the economics of actually how the business works means actually there's been sort of a weird staging to the problem. There've been part of banking organizations that have got more justification for doing transformations than ever before. If you look at mortgage businesses, or if you look at wealth businesses, serving ultra high net worth or serving the private banking level, then actually they can really justify investment. But if you're in retail banking or you're in SME banking where, huge amounts of defaults were taking place and lots of problems, then actually it's almost a real dichotomy of opportunity in that sense. But really what we've seen coming out of it, H1 this year, I think has been difficult for a lot of organizations, but H2 seems to be that the people are kind of not only coming out of their shells now, feeling a little bit more confident. Yep. The financial results from everybody's perspective is looking, pretty good. I think there's almost the storm has been weathered mentality. From what we're seeing, people are really trying to connect with what their purpose is. I think there's a lot of people coming out going, look, customers' lives have fundamentally shifted, and therefore, do we really now know what they need? And do we know enough about what they need more than our competitors do in order to serve that more effectively? It's been a funny year for sure. But I suspect the back end of this year and 2024 will be good. Not just for financial services organizations, but I think for fintech more broadly. I mean, all of the things that you said earlier on around the composability of technology, actually the disruption from fintech has never really been about B2C. I firmly believe, I think it's about B2B. I think the people who are most threatened by players coming in from a technology perspective are the incumbent B2B players. And really the only thing standing in the way of that, I think, is bank procurement departments being able to confidently procure fintech services. And to your point, the architecture that's required in big financial services organizations to do that, once we get to that point, then really it becomes a lot less risky and a lot less cheaper for people to make that level of investment. But again, it's why the exciting parts are really still to come.
It's interesting. We've seen a real change in the fintech marketplace. The funding levels are way down. The most successful fintech players right now are ones that are making money. But as you mentioned, we have a whole new marketplace where traditional banks are looking to fintech startups, to established fintech players, challenger banks, and even third-party solution providers to get them over the hump, to help them solve the problems that are important and to stay relevant and competitive in the marketplace today. So what are some of the more successful collaboration models you've seen between traditional banks and fintech firms, and what has emerged as a result?
Yeah, it's fascinating, isn't it? I mean, it wasn't so long ago you would point at somebody like BBVA and go, "Hey, they get it," or Standard Chartered. Standard Chartered have done a lot. They've built 2 challenger banks now, 3 if you count Ivory Coast. They've done a whole heap of different things, but I think they're all I think every bank's on sort of a different journey to a certain degree, because it always really sort of depends on where you're starting from to determine really where you are on that journey. And Chase Bank have a different culture to contend with than, Goldman Sachs, right? If you've got a retail presence, your operation is going to work really different than you are, a giant wealth manager in that sense. So I think really the destination for all of these organizations is fundamentally different, in the same way as actually their origin is as well. I'd say the ones that I think are being most successful, maybe to sort of play it back in a slightly different way, are the ones that are really understanding that there's a big difference between projects that deliver capabilities and the real evolution that businesses need to go through. And it goes a little bit back to that. Digital isn't an app. It isn't a website. It's not a project or a department, but it's a fundamental operating model. And I think the ones and different players are trying to create that evolutionary step in different ways. If you look at JP Morgan Chase put Chase over in the UK, a lot of people were like, well, why are you doing that? And actually, it was their 3rd or 4th attempt to do something in that way. And what were they trying to get away from? Yep. They were trying to get away from the incumbent technology, the incumbent culture, the incumbent systems, the incumbent way of thinking.
As I say, 35 floors in New York City that are branch based. So they have to somehow separate the digital mindset from the analog mindset.
100%. And actually, now that they've done that, actually, is it really about having a little bank in the UK? No, it's not that at all. I mean, the UK is not big enough to even, we fit very, roughly into like one of your smallest states over in the US, right? So size of customers is not the interesting thing. But actually, in the same way as you when you're cooking, you scale things gradually. You don't make a gigantic swimming pool of soup and put all of the salt in the same time, do you? You do it gradually as you're making sure you're getting to taste the thing that you really need. Now, Chase Bank over in the UK has found product market fit. They not only have found product market fit from a customer's perspective, but from a technological and operational perspective, have discovered the way to run a digital business. Now, if you scale that back into, 60 million customers or something crazy that Chase have got over in the US,
Yeah.
I'm probably lowballing it. Then actually, well, you've suddenly got a checking account you can run for 5% of the one that you can run in the US, or you've got an operating model that can get from your idea to execution in weeks. And for me, that's what people are trying to do. A lot of sort of noise is made about, well, yeah, but is that profitable, or has it acquired enough customers? I think you're missing the point at that stage. I think what people are trying to do is make up for, evolution works because animals and people and things adapt to their environment, therefore stay relevant. What has happened in financial services was we tried to stop evolution happening and fix financial services for a very long time. So actually this level of revolution that's required just kind of gets evolution back on track. And once we've got that revolutionary step done, then evolution can take over, and the iterations, the evolving of the way of doing it really comes to the front. So I'd point to, I think JP Morgan Chase are doing a great job. I mean, Jamie Dimon, as much as he, pontificates quite regularly about the world and everything around it, I mean, I can't remember him getting it too far wrong, or at least hasn't overcome it with changing his mind and putting his hands up. Similarly, Bill Winters over at Standard Chartered, I think Standard Chartered have got it very right in terms of the way in which to get from where they were to really where they want to be was not by just changing, a couple of 100,000 people at the same time. It was by changing 3 and letting those 3 infect everybody else.
It's interesting because in those organizations, you just gave an example, they have been extraordinarily agile in ability to pivot at the same time as they're looking at the long game. I mean, in the US, JP Morgan Chase is still building branches. Why are they building branches? They're building branches in markets where they have an extraordinarily strong credit card base, but without a traditional consumer retail banking base. Well, you put those branches in and you all of a sudden have a way to cross-sell other services to your credit card customers in markets you never were. And then you bring your digital model over and you streamline that all, and it all makes sense. Now, mind you, money gets you far, but the ability to look in the long term as well as act in the short term has extraordinary power. So we've been discussing how banks are adapting to marketplace disruption and how innovation and collaboration are key to staying ahead in this ever-changing marketplace. So David, before we went to break, we were talking about JP Morgan Chase and Chase Bank in the UK, which are vastly different. One's a digital bank. The other one is, while very digital, very much a branch-based organization that's actually building branches in markets that they hadn't had very much penetration in order to serve their credit card customer base. So, you have a lot of experience in this whole branch versus digital model. Do they work together, or do you see everything moving to a digital platform?
Yeah, I think it's fascinating, isn't it? And you would expect sort of in this period of time, post-COVID, nobody could go to branches. And actually, from my perspective, being like a digital guy, you would kind of expect me to be anti-branch. But I don't think that's realistic, if I'm honest with you. And actually, I mean, the research we've done, I mean, even people who have worked in the mortgage industry for 20 years would still want to talk to somebody to make sure they're not messing up a self-serve application process in the form, because the fear of getting it wrong and messing that up is much greater than the upside of getting it right, if that makes sense. So but it goes back to that point we were making earlier on. Digital has been about taking people, paper, and premises out of the process. It's been about almost dehumanizing financial services, and that's not great. Like normal people walking around on the street, I don't think really understand the depth of technical understanding, or even the level of mathematical skills that you need. I'm going to say maths. You guys say math, don't you? But the level of mathematical skills that you need to just do basic APR calculations or percentages. So people need people. Like people need people to interact with. I think the way in which branches are done in a monolithic structure don't work. So do you need people in banking? 100%. Do we need the skill sets of those people contained within the four walls of a branch? I don't think we do. In the same way as actually, I want to have the best medical advice, regardless of where I live for whatever ailment I have, then actually I want the best mortgage advice or the best investment advice, or, given the confidence that actually somebody's looking after my finances. And that can be done. Look, I mean, you're in a completely different place in the world than I am, and we're able to conversate now in this way in a good form because of, video conferencing. I think if banks were able to share the infrastructure and both in terms of the cost and in terms of the upside of branches more globally or more nationally in terms of their capabilities, I think the cost structuring of it fundamentally changes, and the level of service that customers actually get fundamentally shifts as well. So yeah, I'm very pro human banking, but it's how it gets done that I think needs to evolve.
And I think we're going to see that with ChatGPT, interestingly, that the human side of this doesn't go away. It's trying to blend them together. It's interesting also, David, you have an awards program at the end of every year, and you give awards for innovation and in the fintech space and the banking space. You've been in the space a long time, as I have. And we've seen transformation leaders come and go, and financial institutions that, geez, they get it, and others that don't. You've mentioned some already. What do you see that innovative financial institutions today do differently that others can learn from? And actually, what sets them apart from the masses? I mean, we can talk about, as you've mentioned, Standard Chartered. We can talk about Chase. We can talk about DBS. We can talk about, certainly We Bank in China. But why aren't there more? I keep on looking and saying, you look at the global awards programs and they tend to be the same names year after year. What makes it different? And why is it so hard for other organizations to grab onto that magic sauce?
Yeah, I think there are people who try and make themselves feel comfortable, and then there are people who try and make themselves feel uncomfortable. And actually, what you sort of find is, certain organizations will create, and it's always, leadership, I guess, in any form factor or another. There are leaders out there who are trying to make the world that they exist in today continue. And then there are leaders who are trying to make themselves feel uncomfortable enough that actually they can bend the organization to be relevant to the new world, the evolutionary steps as we were referring to. So I guess in that construct, then, the people who are out there, riling against the change are probably the people who are going to be able to understand the change most. Because it's understandable. Again, I go back to banks have been on a great run. They've been wildly successful for a really long period of time. Back in the days of, your ledger being a book, not even a technology system. It was just a big book that you wrote stuff in, that was great. And the physicality of money, the physicality of service was a different world. It's been fascinating, actually. I mean, because you usually will go, well, the shareholder pressure and shareholder value, and you're looking at building out things that your customers want, but your shareholders will stand for. The organization we work with over in the US is a company called F&BO. And I'd never heard of F&BO, before we worked with them. And I'll be honest with you, Clark, who's the CEO, had never heard of us before we started talking to him either. So that's, it's a mutual piece there. But the thing that struck me,
by the way, you can't get any more Midwest than that firm. By the way, you take the whole U.S. You go find me the center. That company's there.
Yeah, I mean, Nebraska, amazing place, like absolutely amazing place. Like Jason, who one of the co-founders of the business, went out there to do jobs to be done framework. And I think it was like minus 28 or something ridiculous when he went out there. He loosely says the TV said if you're outside more than 4 minutes, you would die. So it was cold. But the amazing thing around that is, when you sort of see CEOs of major banks in any geography, their view is very short term. It's about actually the different pressures that they've got. Clark there, first, one of the humblest guys I've ever come across in my entire life, But actually, like second, he's like fifth generation. I'm probably getting that wrong, but fifth generation CEO, which means when he starts talking about legacy, he's not talking about core systems. He's talking about his great granddad's legacy of making something that fundamentally solved problems for their customers and more than just their customers, their community. You know, I think the great thing about the US system, the amount of, I mean, what is it, like 10,000 financial institutions?
A few less than that, but still way too many. Yeah.
But it's like 9,600 of them are community banks. You know, they're sort of single or, you know, single digit state, you know, numbers. And actually the things that they do is about being fundamentally part of that community, you know, understanding the community, understanding the cycles of industry, whether it be agriculture or whatever, and, you know, they get to grips with that community and serve it. Like that for me is bizarrely, I think coming out of this cycle that we're coming out of now, I think we'll see a swing back to that, because I really think if community banks can actually, and you know, regional or even some of the, you know, like FNBO being more of a super regional, if you can get the mentality, the value system of traditional banking, but actually if you can deliver it for the economics of digital banking, that is the beautiful marriage that actually I think is the future of financial services. Because at that point, you're getting the best of both worlds. You're getting brands that people believe in and that they know believe in their customers' problems and solving their customers' problems, that they know are not going to disappear in 2 years' time if some VC in Silicon Valley don't believe in their thing anymore. They're going to be there for the long haul, right? And equally, if they can get the advancements that today's technology can really bring, they can serve those customers in a way that they've never done before. So it really is a beautiful marriage.
With that said, I think a lot of financial institutions today are finding it extraordinarily difficult to keep up. They haven't really embraced the composable solutions. They haven't really stepped out of their comfort zone. And we're starting to see some increases in the US, at least, of consolidation. Do you see the competitive landscape changing quite a bit in the next 3 years? And more importantly, do you see a significant consolidation happening on the horizon that may not just be banks and banks, or credit unions and banks, or credit unions and credit unions, or fintech and fintech, but maybe fintech banks and credit unions, or consolidation just overall because of the efficiency?
Yeah, definitely. I mean, I think definitely the efficiency of bringing about scale in that way. But funding is harder to come across, you know, and actually I think for the fintechs then, you know, a lot of them are looking at getting out, you know, actually they've got there's always the story, isn't there, about, you know, is it a feature? Is it a product? Is it a business? You know, when you go through a huge boom of a cycle of investment in fintech, not everything makes it through that cycle. You know, the beachhead of a great feature might develop into a great product, but it might never really get through to that fully formed, sustainable, profitable business. And therefore, actually, whether you're a bank or whether you're another fintech looking to acquire, either from a technological capability perspective, but increasingly, and you know, the US and Europe particularly, we're seeing this for regulatory reasons. Actually, you know, some of these regional banks have charters to operate in certain states. You know, from the UK to Europe, acquiring a European bank gives you access to a much bigger market. And actually, you know, scalability, you know, we go back to the point earlier on around somebody like Chase. I mean, actually, you've got to lose pretty damn hard with 60 million customers to lose. So, you know, actually, if you can insulate yourself really, really well by, you know, consolidating and getting to a scale where, I mean, you could lose a state and Chase would still be fine, you know, like in terms of like it could be devolved to Canada or something. I don't know. There would be some weird political, when, you know, if Trump comes back, that's going to be one of his policies, I'm pretty sure, you know, like, so, but it's, you know, this could happen and Chase would still be great given the scale of operation that they've got and the, you know, the scale of customers that they have. So, I mean, I do think there will be more consolidation. I hope with that consolidation, it's it's different than the cycle that we saw before. I mean, we saw banks buying fintechs, say sort of 2014, 2015, maybe a little bit earlier. And the challenge there was when you acquire something you don't really understand how to run, then actually you can quickly ebb away the value of that. And I think that's the risk potentially with the changes that we've seen at somewhere like Silicon Valley Bank. Silicon Valley Bank customers banked with Silicon Valley Bank because Silicon Valley Bank understood technology, right? They had people who got them. They've had a business that was similar to theirs, supporting theirs. That's very different when, HSBC or whoever acquire customers. I know it's different in lots of different countries. So I think if you buy something and it's expensive, you better be sure you really understand how to run it. Because if not, that value might ebb away really, really quickly.
Yeah, the story in HSBC is still being written, even though they had a great first financial reporting. I look at the marriage and you go, geez, that's not one I saw coming. So, okay, so we wrap up in a short segment here. What do you see as the biggest opportunity in retail banking today?
I think the biggest opportunity is moving away from self-service, moving towards a real service. I think people don't want to do banking. I think they want banking to be done for them. So for me, that's the biggest opportunity. We move to self-driving money. Yep.
What's the biggest threat?
I think the biggest threat in financial services, retail banking, I think is really like the existing way that things are done. I think the challenge there really is culturally, operationally, business model-ly, definitely not a word. I think that's the biggest challenge because almost the reasons to change for some people are too difficult.
You know what? And you've been on personal transformation over your whole life in many ways, and changing behavior is not easy, and it sucks. And it usually is only done because something important happens to you as a person or you as a business that makes you change. And finally, to use your terminology of jobs to be done, what are the 3 items? If you went into a retail bank today, and I realize every retail bank's, very different. But as you look at a lot of different banks in the industry globally, what are the 3 most important jobs to be done right now?
Yeah, I think the first and foremost, do you really understand your consumer? I think the brutal realities of day-to-day lives are fundamentally different today and more complex now than they ever have been. So get to grips with what your customers' problems are is the first one. Do you actually have a digital operating model? Can you actually take something from the whiteboard or the strategy paper you've written to get sign-off at your board? Can you actually do that? Because if you can't do it, it's a lovely picture, but you're not actually going to achieve anything. And then the last one, I think, would be about focusing on your culture. How do you unleash potential of the people that you've got within your organization? Because every bank, every company I've ever worked with, there are pockets of people who care deeply about solving customers' problems and probably genuinely really understand those problems better than anybody else in the world. The thing that gets in the way is the current organization. It's the current culture of that organization to make those things happen. So how do you gear up yourself to unleash their potential? Because if you do, you're going to be in a much better place.
David, thank you so much. Not that it's too hard to find you, but for those who might not have gotten it, how do people find out what your thoughts in your industry, both yourself and your organization, what your thoughts are today and what's going on in the banking world?
Yeah, no problem at all. Best place to find us is 11fs.com. And if you want to check out the podcast, it's FinTech Insider. Just search for us anywhere you want to. If you want to find me, do you know what? I've given up on most social media, if I'm honest with you, but you can find me lurking predominantly on LinkedIn these days. But just search for me there and always happy to connect.
David, thank you so much. It's always good to get together with you, and we'll have to do this again sometime.
Sounds good.
Thanks for listening to Banking Transform, the winner of 3 international awards for podcast excellence. If you enjoy what we're doing, please take 30 to 45 seconds to show some love in the form of a review. It really helps us to get guests like we have today. Finally, be sure to catch the recent articles I've written for the Financial Brand and check out the research we're doing for the Digital Banking Report. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Haslage, and audio engineer and video producer, Will Pritz. I'm your host, Jim Marous. Until next time, remember, the future belongs to those that see possibilities where others see peril.